We are here with Meridy Bryant
Hello.
with Loan Depot.
Yes. Hi.
Tell us about your newest loan product.
Oh, this is so exciting. So we are calling it our 5x5.
So exciting.
A loan product is exciting. This one actually
she's in the right
is.
space.
For
She's
me.
in the right space.
So here's the thing is, for me, it's exciting because this is what I do all day, right?
I don't do loans
So-
all day, and I'm excited about
Yeah.
it.
Okay, so
I'm beside myself.
right. So we are calling this our 5x5. And the reason for that is because it is a 5-minute application and it can be funded within 5 days. And so it could be a little bit faster, it could be a little bit longer, just depending on.
That never happens.
I know,
5 days?
which is why this is amazing. And it is a line of credit, so you can borrow back and forth against it. It's a little bit different when it comes to the traditional line of credit where you are providing tax returns and bank statements and different things to prove your income, where this is actually utilizing alternative ways of your income, which is through deposits into your bank account. And they do that because it can be quick and because, again, it is 5 minutes for the application. We use an AVM, which is an automated value method, evaluation method.
So no appraisal?
No appraisal. And so, again, this is a lien against the property. So it is going to be in second position. If your home is free and clear, you can actually use this product as well. This is
What if you already have a HELOC?
Then we can replace it with a new one. Line amounts are $25,000 up to $750, and it can be on a primary residence.
You can buy the boat.
I know it.
Don't
Or
buy
the
it.
other
Don't buy a
house,
boat.
right? Or the other house.
Yes.
And actually, you
So-
can use this line.
Talk about that for a second.
Okay.
So let's say you have a whole bunch of equity. You lived
Yes.
somewhere forever and you're going to buy an investment property.
Yes.
How does that work?
So this line would allow for you to take money out of your existing property and use that for a down payment, closing costs to purchase 1, 2, 3, just depends on what your goal is financially for your investment properties and your portfolio. Because that's what we want to help with, don't we?
Is this a silly question, but like, could you use that and also apply for like another loan? You know what I mean, right? Like you need money for a down payment, but you also still need a loan.
Yes, you can. Because this is actually a line of credit that would take the place of going through the 4 to 6 weeks that is the traditional time frame in order to get a second mortgage or to pull money out of your property.
Okay.
And this alleviates that whole waiting period and providing all the extra documentation that's typically needed.
Okay.
So this is, we're hoping 5x5, 5 minutes for the application, and then 5 days, up to 5 days for funding to take place. So I personally have already started. It's only been out for 3 or 4 days now, maybe a week, and probably 6 or 7 people. There are a few people that it has not worked for, whether it's just the equity position, because we can go up to 85% combined loan to value. And so it does limit some people if you have higher balances on a property that you're trying to pull money out of. But if you do have equity, going back to that question, is if you do have equity in your property, you can take out this loan to establish that you have funds for a down payment for a new property that you're purchasing.
Yeah.
You can make an offer non-contingent because you have the equity. As long as you're qualifying for whatever the loans are that you're taking out, then you can use this however you need to. You can take it out and do improvements before you sell or while you're selling. The property can be listed for sale. So there's a few other things that...
Which is huge because
huge.
A lot of HELOCs don't let you pull money out if it's currently listed.
That is correct. You have to take it off of the market first. Even for a cash out refinance, you have to take it off of the market. In most cases, there are some other products that allow for that. But again, and pricing is reasonable. There's an origination fee that goes along with it that you actually choose. There's no upfront or out-of-pocket cost.
We'll talk about that. Like it's a sliding scale.
So it is, yes. So as you're looking at it, so for example, let's go through the application together. I get your regular personal information. Based on that, an evaluation comes back and tells me what the value of your property is. And then once that comes back, then I have a sliding scale that based on the origination that you want to pay, which is either 1.99% up to 4.99%. And depending on credit scores, which go as low as 600. And then that sliding scale, you're deciding with me on what is going to work best for you. You can do a 10-year, a 15, a 20, or a 30-year payment on it. And so the flexibility of it is there, which is taking the place of that traditional 4 to 6 weeks waiting period, trying to get a loan. Maybe it's going to come in, maybe the value won't. You know instantaneously exactly what it is that you can and cannot do.
So it could be used to pay down debt. It could be used to do home improvements, to build an ADU.
Yes.
As a down payment.
What's the total max?
$750. Yes.
Yeah.
Up to $750.
Gotcha.
Yeah.
Anything else?
Not yet.
Not yet. All right. So there's so many uses for this loan product, which is why we wanted Meridy to be on here. If you are looking to do improvements, if you are looking to buy an investment property, build there's so many different things, even just pay down credit card debt.
Consolidation. Just credit cards alone, those interest rates are 15 to 35%. 35.
Right. That's crazy.
I helped a lady just 2 days ago. 29%, 31%, 33%. I think 33 is probably the highest I've seen.
Oh my gosh.
But 33%.
So she was able to
flooded. Yep, she needed immediate cash. And so while she was waiting on her insurance company, and so she used all of her credit cards that she could. And so now we're consolidating all of that. And her interest rate is 9.8% compared to 29, 30.
33? That's crazy.
33%.
Right.
33%,
Yeah.
$50,000. Can you believe that?
And for her, it's perfect because then once she gets her insurance money, she can pay that off.
She can pay that down.
Yeah.
And then if she has that as a line of credit to use in the future if she needed it. Absolutely.
Awesome. Okay. So
send us a message if this is something that you could utilize.
Yes.